In this video, we will discuss different types of banking.
Hello guys, welcome to my channel. In this video, we will discuss different types of banking. Okay, so first we will move towards what is banking or what is bank. So a bank is a financial institution that is licensed to accept checking and savings deposit and make loans. Bank also provide related services such as individual retirement accounts, which is also known as IRAs, certificates of deposits, which is also known as CDs, currency exchange, and safe deposit boxes. There are several types of banks, including retail banks, commercial or corporate banks, and investment banks. Okay, so first we will discuss the different types of banking, and then I will further elaborate all of those bankings further in this video. So just watch the video till end. Okay, so number one is checking account, savings account, loans, credit cards, debit cards, ATM, wire transfer, direct deposit, interest rate, mortgage, overdraft, investment, financial planning, wealth management, insurance, online banking, mobile banking, digital banking, wallets, financial technology, cryptocurrencies, blockchain, electronic funds, transfer, merchant services, cash management, foreign exchange, trade finance, asset management, retirement planning, retirement, credit score, bank fees, mutual funds, stocks, bonds, trading, platforms investment, research, private banking, correspondent banking, commercial banking, investment banking, retail banking, corporate banking, personal banking, business banking, microfinance, financial literacy, financial education, financial wellness, financial coaching, credit counseling, debt management, budgeting, savings, retirement accounts, health savings accounts, flexible spending accounts, employee benefits, power of attorney, home equity loans, auto loan, personal loan, student loan, overdraft protection, SWIFT code, exchange international, banking cash management, Islamic banking, cooperative banking, credit unions, credit builder loans, vacations loans, weddings loan, emergencies loan, medical treatment loan, renovations loan, consumer loan, check bearer, check uncrossed, open check, cross check, post dated check, salary account, recurring deposit account, Roshan digital account, special savings account, kids account, Asan account, installment plan. Okay, so we will discuss the currency type now. EUR, USD, USD, JPY, GBP, USD, GBP, USD, AUD, USD, CAD, EUR, JPY, USD, CHF, USD, HKD, EUR, JPY, USD, CAD. Okay, so now we will to move on towards the bank's name. There are Industrial and Commercial Bank of China Limited, China Construction Bank, Agriculture Bank of China, Bank of China, JP Morgan, Chase Bank, JP Morgan, Chase Bank, Bank of America, HSBC Bank, BNP Paribas Bank, Citibank, Japan Post Bank, Bank of Communications, Royal Bank of Canada, NatWest Group Bank, DZ Bank, Australia and New Zealand Banking Group, Bank of Beijing, Qatar, National Bank, Swedbank, Bank of Pakistan, Bank of America, Bank of Japan, Bank of China, Bank of London, Bank of Dubai. Okay, so now we will discuss the bank credit and its types. So, what is bank credit? First, I will introduce to you guys that what is bank credit, and then we will discuss its types. Okay, so what is bank credit? So basically, bank credit, it is a financial tool that allows individuals and business to borrow money from banks to make purchases or pay bills with the promise to repay the borrowed amount plus interest over time. Bank credit is a crucial part of personal finance and business finance, and understanding how it works is essential for managing your finances effectively. Okay, so now we will discuss the types of bank credits. There are 6 types of bank credits: personal loans, mortgages, car loans, lines of credit, credit cards, and business loans. Okay, so first we will discuss the personal loans. So, what are personal loans? So, basically, personal loans are the installments which allows you to borrow a fixed amount of money and repay it in equal installment over a set period. Personal loans can either be secured or unsecured depending on whether you provide collateral to secure the loan. Secured personal loans require collateral such as a car or house, while unsecured personal loans do not require collateral. To apply for a bank loan, you need to fill out an application form and provide documentations such as your income, employment history, credit history. The bank will review your application and documentation to determine whether to approve your application for loan or and what interest rate to charge you. If your loan application is approved, you will receive the borrowed amount and you will need to repay that borrowed amount plus interest over time. Okay, so now we will move towards mortgages. What are mortgages? Mortgages are the loans that allows you to buy a home and repay that borrowed amount plus interest over a set period. Mortgages are secured loans, which means that the house you are buying serves as collateral for the loan. Mortgages typically have longer repayment periods than personal loans, ranging from 15 to 30 years approx. So these are mortgages. Basically, mortgages are the secured loans, and these loans allows you to buy a house, and then after that, after buying the house, you can repay that borrowed amount and then plus the interest amount over a set of period. And the range of that loan time is 15 to 30 years approx. Okay, so now we are moving towards the car loans. What are car loans? Car loans are a type of secured loans that is used to purchase a car. The car itself serves as collateral for the loan, which means that if you are unable to repay that loan, the lender can repossess the car to recoup their losses. Car loans typically have a fixed interest rate and a set repayment term, which can range from 12 months to 84 months approx. The interest rate you receive will depend on a variety of factors, including your credit score, income, and the amount you are borrowing. There are two main types of car loans: direct car loans and dealership financing. First, we are discussing the direct loans. Direct loans typically offer lower interest rates than the dealership financing, but may require a higher credit score and a larger down payment. Dealership financing may be easier to obtain, but often comes with higher interest rates and fees. When applying for a car loan, you will need to provide the information about your income, employment history, and the credit score. Of course, these information are must for applying for a loan. You may also need to provide the information about the car you are purchasing, including the make, model, and VIN. Once you are approved for a car loan, you will receive the funds to purchase that car. You will then be responsible for making monthly payments on that loan until it is fully repaid. If you are unable to make your payments, the lender will repossess that car and sell it to recoup their losses. Overall, car loans can be a useful tool for purchasing a car, but it is very important to carefully consider the terms of the loan and your ability to make the required payments before taking out a loan. It is a must for and it is must and very important for applying for a car loan. Okay, so here is some information about the lines of credit. What are lines of credit? It is also a type of bank credit. A line of credit is a type of loan which allows you to borrow money as you need it up to a predetermined limit. Lines of credit are typically unsecured, which means that they do not require collateral. Lines of credit are often used to provide funding for short-term expenses such as home repairs, medical bills, or unexpected expenses. They can also be used to finance small business operations, to provide working capital for startups. Lines of credit typically have a variable interest rate, which means that the interest rate can change over time. The interest rate you receive will depend on a variety of factors, including your credit score, income, and the amount you are borrowing. And there are two main types of line credit: personal lines of credit and business lines of credit. Personal lines of credit are typically used for personal expenses, while business lines of credit are used to finance business operations. When applying for a line of credit, you will need to provide the information about your income, employment history, and credit score. You may also need to provide the information about the intended use of that funds. Once you are approved for a line of credit, you can borrow money as you need it up to the predetermined limit. You will be responsible for making monthly payments and on the amount borrowed plus interest. Overall, lines of credit can be a useful tool for providing funds for short term expenses, or for financing small business operations. However, it is important to carefully consider the terms of lines of credit and your ability to make the required payments before taking out a loan. Till now, we have discussed the personal loans, mortgages, car loans, lines of credit. We have left credit cards and the business loans, which we will discuss further in this video. Okay, so now we will discuss what are credit cards. Credit cards are a popular form of revolving credit that allows you to make purchases up to a certain limit and repay that borrowed amount over time. Credit cards are unsecured loans, which means that they do not require collateral. Credit cards typically have higher interest rates than the other types of loans. We can say that the credit card is a type of payment card that allows you to borrow money from a bank and or other financial institutions to make purchases. And when you use a credit card to make the purchases, you are essentially borrowing money from the bank, which you will need to repay later. Basically, credit cards typically have a credit limit, which is the maximum amount you can borrow at any given time. Your credit limit will depend on a variety of factors, including your credit scores, your income, and your credit history. Credit cards typically have a variable interest rate, which means that the interest rate can change over time. The interest rate you receive will depend on a variety of factors, including your credit score, your income, and your credit history. When you use a credit card to make a purchase, you will be required to make monthly payments on the amount borrowed plus interest if you are unable to make your payments. You may be charged late fees and your credit score may be negatively impacted. Uh, Credit card can also come with additional benefits such as reward programs that allows you to earn points or cashback on your purchases. Some credit cards also offer travel benefits such as travel insurance and airport lounge access. Overall, credit cards can be a useful tool for making purchases and earning rewards, but it is important to carefully um, consider the terms of the credit card and your ability to make the required payment before applying for a card. And additionally, It is very important to use credit cards responsibly to avoid accumulating debts. Paying off your balance in full each month can help you avoid interest charges and keep your credit score in good standing. And it is also very important to monitor your credit card statements regularly and report any unauthorized charges to your credit card issuers. Finally, be sure to choose a credit card that meets your needs and offer the benefits that are most important to you. It is also important to be aware of the fees associated with credit cards. Some credit cards may charge an annual fee, while others may charge fees for balance, transfers, cash advantages, or foreign transactions. Be sure to read the terms and conditions of any credit card you are considering to understand the fees that may apply. Finally, it is very important to protect your credit card information from fraud by keeping your card in a very safe place, using secured websites when making online purchases, and reporting any kind of suspicious activity which you found suspicious to your credit card issuer. If you find any kind of suspicious activity, you have to inform your bank about that suspicious activity so that bank can resolve your issue. Okay, now we will discuss about the business loans. Business loans are those loans which allow business to borrow money to make purchases or to pay bills with the promise to repay that borrowed amount plus interest over time. Business loans can be either secured or unsecured, uh, depending on whether the business provides the collateral to secure the loan. Business loans can be used for a variety of purposes, such as purchasing equipment, hiring employees, or expanding the business. So here are some more information about the business loan. It is a type of loan which is designed to help business to finance their operations, to make investments. Business loans can be used for a variety of purposes, including the purchasing equipment, hiring employees, expanding operations, or refinancing the existing debt, and etc. etc. Business loans can be secured or unsecured. Secured loans require collateral such as real estate or equipment, which the lender can seize if the borrower is unable to repay that loan. Of course, the the bank which is giving you a loan will make sure that the person which they are giving the loan is able to give back that the money of loan or not. And unsecured loans do not require collateral, but they may have higher interest rates and stricter eligibility requirements. Business loans can be obtained from a variety of sources, including banks, credit unions, and online lenders. The terms and conditions of business loans can vary widely depending on the lender and the borrower's credit worthiness. When applying for a business loan, lenders will typically review the borrower's credit score, business plan, financial statements, and the other information to assess the borrower's ability to repay the loan. As I have told you that the lender which is giving the money to the borrower will make sure that the borrower is able to give back the amount of the loan or not. So yeah, that's it. And lenders may also require a personal guarantee, which means that the borrower is personally responsible for repaying the loan if the business is unable to do so. And business loans can have um, or variable interest rates. Fixed interest rates remain the same throughout the life of loan, while the variable interest rates can change over time based on the market conditions. Overall, business loans can be useful tool for business looking to finance their operations or to make investments. However, it is important to carefully consider the terms of the loan and the borrower's ability to repay the loan before applying for a loan. And these are the some important types of the loans which I have told you in deep detail. It is also very important to have a solid business plan in place before applying for a business loan. There are so many types of banking. For example, banking, finance, money, savings, credits, loans, investments, budgeting, interest rates, financial planning, or online banking, mobile banking, ATM, checking accounts, saving accounts, credit cards, debit cards, financial literacy, um, requirement planning, mortgage, student loans, financial goals, financial management, wealth management, financial security, financial independence, financial freedom, personal finance, business finance, financial advice, financial education, financial tips. Okay, so now we will move towards the investment and wealth management. It is also a very important tool for building long term financial security. Here are some things to keep in mind. Investing involves putting money into various types of assets such as stocks, bonds, and real estate with the goal of generating a return on investment. There are many different investment strategies and approaches, and it's important to choose one that aligns with your financial goals, risk tolerance, and time horizon. Wealth management is a broader term that refers to the process of managing a person's wealth, including their investment, retirement planning, tax planning, estate planning, and more. Wealth management services may be provided by financial advisors, banks, or other financial institutions. When investing, it's important to diversify your portfolio to spread risk across different types of assets and industries. This can help to reduce the impact of market fluctuations and protect your investments. It is also very important to regularly review and adjust your investment strategy over time to ensure that it remains aligned with your financial goals. When working with a financial advisor or wealth manager, it is important to choose someone who is knowledgeable, trustworthy, and has to be your best interests in mind. Um, Look for advisors who are transparent about their fees and are willing to work with you to develop a customized investment plan. Investing and wealth management can be a powerful tool for building long term financial security and for achieving your financial goals. It is important to do your research and work with your it is very important point basically to work with your trusted professionals and to ensure that you are making informed decisions and managing your wealth effectively. Investing and wealth management requires careful considerations and plannings. um, I am giving you some additional details to help you better understand these concepts. So, first, we are talking about investing. It involves putting money into various types of assets with the goal of generating a return on investment. There are many different types of investment, including stocks, bonds, mutual funds, exchange traded funds, real estate, and more. Each type of investment carries its own level of risk and potential return. Generally, higher risk investment have the potential for higher returns, while lower risk investment have the potential for um, lower returns. Um, Diversification is a key principle of investing. This involves spreading your investment across different types of assets and industries to reduce the impact of market fluctuations and protect your investments. Investment strategies can vary widely depending on the factors such as your financial goals, risk tolerance, time horizon, and more. Some common investment strategies. It includes value investing, growth investing, income investing, and more. It is very important to regularly review uh, and uh, and adjust your investment strategy over time to ensure that it remains aligned with your financial goals and risk tolerance. Now we will discuss about the wealth management. Wealth management is a broader term that refers to the process of managing a person's wealth, which includes their investment, their retirement planning, their tax planning, their estate planning, and more. Wealth management services may be provided by financial advisors, and maybe banks or other financial institutions. When working with a wealth manager, it is important to choose someone uh, who is knowledgeable, who is trustworthy, and has your best interests in mind. Uh, and Look for the advisors who are just transparent about their fees, which I have already told you, and they are willing to work with you to develop a customized investment plans. Make sure that they are really helping you, or they are helping you to make a customized investment plan. And retirement planning is a key component of wealth management. It involves the savings for retirement through vehicles such as uh, such as um, such as the plans, uh, IRAS plans, and more. Tax planning is another important aspect of wealth management. This involves developing strategies to minimize the amount of taxes you owe each year, such as through tax advantaged investments or charitable giving. Estate planning, it is the process of managing and distributing your assets after you pass away. This may involve creating a will, setting up trusts, and more. Overall, wealth management is a comprehensive approach to managing your finances and achieving your long term financial goals. By working with a trusted advisor and developing a customized plan, you can build a long term financial security and um, achieve your financial freedom. And investing and wealth management are both important tools for achieving financial success and long term security. Um, by developing a customized investment plan and working with a trusted advisor, you can build a diversified portfolio that aligns with your financial goals, risk tolerance, and wealth management services can help you manage your finances holistically, from retirement planning to tax planning to estate planning and more. By taking a comprehensive approach to your finances and working with a knowledgeable advisor, you can achieve a financial freedom and build long term wealth. And these are some important points. Uh, there are some more type of banking like online banking, mobile banking, ATM, checking accounts, saving accounts, credit card, debit card, financial literacy, retirement planning, mortgage, student loans, financial goals, banking, finance, money, saving, credit loans, investments, budgeting, interest rate, financial planning, and the management, financial management, wealth management, financial security, or banking service, or the central banking, private banking, investment banking, commercial banking, retail banking, and online banking, credit unions. Okay, so now we will move towards the retail banking. Um, Anyone know what retail banking is? Just pause the video here and write the answer in the comment box. Um, okay, so the retail banking, it is the most common type of banking that most people are familiar with. It includes services like checking and saving accounts, loans, credit cards, and ATM access. So basically, it is a type of banking mm, that provides the financial services to their individual consumers. These services, it can include the checking and saving accounts, the loans, the credit cards, ATM access. Retail banks are typically the most common types of bank, and they are often found on main streets and in shopping centers. One of the primary services offered by the retail bank is deposit accounts, such as the checking and saving accounts. These accounts allow the consumers to deposit and to withdraw money, to pay bills, and to earn the interest on their deposits. Checking accounts are often used for day to day transactions, while saving accounts are typically used for the longer term saving goals. The retail banks also offers a variety of loan products There are many types of loan which I have already discussed in this video. um, who Auto loans, mortgages. These loans allow the consumers to borrow money for a specific purpose, such as the buying a car or a home. The loans are typically repaid over a set period of time with the interest. Credit cards are another common service offered by retail banks. These cards allow the consumers to make purchases and to borrow money on credits. Credit cards can be a convenient way to make purchases, but they can be expensive if not used responsibly. Yeah, the ATM access is another important service offered by the retail banks. ATMs allows the consumers to withdraw the cash and to check their account balances and to make deposits. The many retail banks also offer the online and the mobile banking services, which allows consumers to access their accounts and to make transactions from their computer and their mobile services. Retail banking is an important part of the financial service industry, and it provides a wide range of services to the individual consumers, whether you need a checking account, whether you need a loan, whether you need a credit card. There is a retail bank out there that can meet all of your needs. Yeah. Checking account, savings account, loans, credit cards, debit cards, ATM, wire transfer, direct deposit, interest rate, mortgage, overdraft, investment, financial planning, wealth management, insurance, online banking, mobile banking, digital wallets, financial technology, financial technology, cryptocurrencies, blockchain, electronic funds, transfer, merchant services, cash management, foreign exchange, trade finance, asset management, retirement planning, retirement, credit score, bank fees, mutual funds, stocks, bonds, trading platform, investment, research, private banking, correspondent banking, commercial banking, investment banking, retail banking, corporate banking, personal banking, business banking, microfinance, financial literacy, financial education, financial wellness, financial coaching, credit counseling, debt management, budgeting, savings, retirement accounts, health savings account, flexible spending accounts, employee benefits, power of attorney, banking mortgage, home equity loan, auto loan, personal loan, student loan, credit card, debit card, ATM, overdraft protection, mobile banking, wire transfer, SWIFT code, foreign exchange currency, exchange international, banking cash management, types of banking, retail, banking commercial, banking investment, private banking, Islamic banking, cooperative banking, credit unions, online banking, auto loans, student loans, mortgage loans, home equity loans, credit builder loans, vacations loan, weddings loan, emergencies loan, medical treatment loan, renovations loan, consumer loan, check bearer, check uncrossed, open check, crossed check, post dated check, checking account, savings account, deposit account, current account, foreign currency account, fixed deposit account, salary account, recurring deposit account, Roshan digital account, special saving account, kids account, Asan account, installment plans, currency type, EUR USD, USD JPY, GBP USD, AUD USD, USD CAD, EUR JPY, USD CHF, USD HKD, EUR JPY, USD CAD. Bank name, Industrial and Commercial Bank of China Limited, China Construction Bank, Agricultural Bank of China, Bank of China JP Morgan, Chase Bank JP Morgan, Chase Bank Bank of America, HSBC Bank, BNP Paribas Bank, Citibank, Japan Post Bank, Bank of Communications, Royal Bank of Canada, NatWest Group, Bank DZ, Bank Australia, New Zealand Banking, Group Bank of Beijing, Qatar, National Bank, Swedbank, Bank of Pakistan, Bank of America, Bank of Japan, Bank of China, Bank of London, Bank of Dubai. Okay, so now we will move towards that how to choose a bank. So choosing a bank can be a daunting task, but there are several factors to consider that can help you make an informed decision. First, consider the bank's location and accessibility. Do they have branches and ATMs in the convenient locations? Or do they offer online banking services that allow you to manage your account from anywhere? Or if you are preferring person banking, you may want to choose a bank with a physical branch nearby. However, if you value convenience and flexibility, and online banking may be a better option. Secondly, consider the bank's fees and interest rates. Look for a bank that offers low or no fee on checking and saving accounts and competitive interest rates on savings and investment products. You should also consider the bank's overdraft policies and fees, as well as any penalties for early withdrawal or account closure. Third, consider the bank's customer service and reputation. Look for a bank that has a strong reputation for customer service and that is responsive to your needs and concerns. You can also check online review and ratings to get a sense of how other customers feel about the bank's products and services. Consider the bank's security and fraud prevention measures. Look for a bank that uses strong encryption and multi-factor authentication to protect your personal and financial information. You should also look for a bank that offers fraud monitoring and alerts to help you detect and prevent unauthorized activity on your account. Consider any additional benefits or services that the bank offers, such as mobile banking, budgeting tools, or rewards programs. These can help you manage your money more effectively and save money over time. Choosing a bank requires careful consideration of your needs and preferences, as well as the bank's products, services, and reputations. By doing your research and comparing your options, you can find a bank that meets your needs and helps you achieve your financial goals. Now I will tell you how to choose a bank in 8 steps. First, identify the right account. Look for banks that charge low or no fee. Third, consider the convenience of a bank branch. Take a look at credit unions. So, what are credit unions? A credit union is a member owned non profit cooperative of financial institution. Credit union may offer financial services as commercial banks, such as share accounts, or we can say that saving accounts, share draft accounts, which are also known as check accounts, credit cards, share term certificates, and online banking. Normally, only a member of credit union may deposit or borrow money. In several countries, credit unions are commonly referred to SACCOS, which stands for Saving and Credit Cooperatives. Worldwide, credit unions system vary significantly in their total assets and average institution's asset size, ranging from volunteer operations with a handful of members to institutions with hundreds of thousands of members and assets worth billions of US dollars. Okay, so the fifth step is find a bank that supports your lifestyle. Examine digital features, understand the terms and conditions, read reviews for bank you are considering. These are the total 8 steps. I am repeating all those steps one by one. Number 1, identify the right account. Number 2, look for banks that charge low or no fee. Number 3, consider the convenience of a bank branch. Number 4, take a look at credit unions. 5, find a bank that supports your lifestyle. Examine digital features. Number 7, understand the terms and conditions. Number 8, read reviews for banks you are considering. And that's it. If you find a bank that meet all of all these eight of your requirements, then you are good to go for that bank.